Okay, the next topic that we are going to take today is central bank digital currency. In one of my previous lectures, okay, in the last week I guess, we talked about cryptocurrency and the concern of RBI around cryptocurrency. We talked about how cryptocurrency functions. We talked at length about what the technology is, what is the concept of cryptocurrency, what is concept of Bitcoin, and what is this whole hoopla about this cryptocurrency. Okay, and believe me, this is going to be in news for a good amount of time, for the good amount of coming time. That means we should focus a lot on this cryptocurrency or digital currency and all these things. Now we have seen that there's a very high speculation in cryptocurrency. Okay, cryptocurrency examples are Bitcoin, Ethereum, Dogecoin and all these. Now cryptocurrencies are not regulated by any central government, Cryptocurrencies are not regulated by any government. So why are people investing in cryptocurrencies? Okay, that is the first question that arises into our mind. People are investing in cryptocurrencies mainly to speculate. Like why people invest in bonds, or why people invest in shares. You know, the main reason for investing in bonds or shares is to make a profit dependent on the variation in interest rate. They have some monies to spare. They can see, in economics there's always an opportunity cost. If you do this, you lose the opportunity of doing this. If you do A, you lose the opportunity of doing B. If you do B, you lose the opportunity of doing A. That lost opportunity has a cost. Okay, that is called opportunity cost. Now people who are economists make an analysis, cost benefit analysis, which loss of opportunity will give me a new opportunity, and whether this new opportunity will generate profits, or whether this opportunity will generate profits for me or not. If the opportunity cost is very high, if the opportunity cost of losing this is very high, I will not go with this. This is basic phenomena. Now when people have spare money, right, what they do, they can either go and save it with a savings account in the bank, or they can invest that money in bonds or share or mutual fund and all these things. Now a very basic question, why is the interest rate on bonds higher than the interest rate on savings account? Like you have some amount of money, for example 500 rupees. You have two options. You can go and deposit that 500 rupees into bank in a savings account, which offers around, for example, 4 to 5% interest rate, or basically 3 to 4% interest rate depending upon the bank. And you can take that money into some other market, bond market for example. You can purchase a bond which offers interest rate around 10 to 11%. Now why is this anomaly? Okay, the first important point to note here is that the savings account offers low rate because the bank is taking your deposit and keeping it with itself. Okay, of course it is investing in some, it is taking money from you, it is investing in some other, like in expansion of its asset size, for example. Now what is an asset? Loan. For a bank, loan is an asset. Okay, but what is a bond? A bond is a loan that you offer to someone when you purchase a bond. Okay, so when you purchase a bond, you offer your money to some company. Okay, and that money is a loan to the company. What is share now? Share is equity. I always stress upon this fact that you know what is equity, what is debt. Okay, bond is debt, because there was a question this year itself about this variation of equity and debt. And this is very important. It is going to be important for at least 3-4 years now, because in the international scenario, like the Federal Reserve has raised its interest rate. That is affecting the flight of capital from India back to US. That is affecting our bond market. That is slowing down. That is affecting our bond yields. That is affecting our long-term bond yields, which is affecting again our treasury bond yields. So it is all very much connected, and we are now in the phase of this economic like post-COVID economic conundrum that we are right now in, it is going to affect us very badly. That is why this is going to be in news for a good period of time, and it's better you understand it very well. Now, cryptocurrency we were talking about. Now, cryptocurrency is a currency not regulated by any central bank. It is rather developed by some developers, software engineers for example, and most of the cryptocurrencies are not centrally regulated. They cannot be regulated by one person. Like banks can regulate the value of money. Banks can regulate the value of rupee. Why? Because rupee is what? A fiat currency. Rupee is a fiat currency. Now fiat currency means, fiat means order. Rupee is a fiat currency because there is no inherent value in rupee. Rupee की value कितना हो? If you take a 2000 note, hardly 5 rupees is invested in making one 2000 rupees note, or maybe 10 rupees, not more than that. So there is no inherent value in the rupee, but its value is derived by a sovereign banking. Sovereign backing. Sovereign backing means a sovereign government is providing a backing to that currency. It is saying that in case you want to exchange that rupee with the RBI or Central Bank of India, that is Reserve Bank of India, then, not central bank in the terms of the public sector bank, we are not talking about that. That means the central authority of banking in India, that is Reserve Bank of India. If you take your currency to Reserve Bank of India, the Reserve Bank of India is obligated to provide you sum of rupees 10 or rupees 2000 in exchange for that currency. That is why it is fiat currency. Fiat currency means any currency which derives its value from government order, from government backing. Now, in the Union Budget of 2021-22, our Finance Minister Ms. Nirmala Sitharaman, she said that the RBI will be starting this central bank digital currency. Central bank digital currency. Now there is a news that the phased implementation of digital currency for wholesale retail segment is already in the progress. RBI has said that the implementation of central bank digital currency for wholesale retail segments in the works, RBI official. Okay, now it is a digital or virtual currency. Although the news report says that it is digital or virtual currency, but we will observe a minute difference between both digital and virtual currencies. Okay, it is actually not a cryptocurrency. However, it is backed by a crypto based technology. Now, crypto is not a rocket science. Crypto means any feature that secures digital transactions on a network. Okay, that secures digital transactions on a network, which records all these transactions, okay, and makes a ledger that is publicly available. If the ledger is publicly available, everyone can verify, okay, the transaction, and hence the security or the genuineness of the transaction is maintained. I have talked at great length about the whole working of cryptocurrencies in one of my previous lecture. Kindly go back to that, and I believe there is no better explanation for working of cryptocurrency than that. Okay, what is digital currency? Now what is digital currency? Okay, now someone can say Paytm wallet, for example, you have 2000 rupees in your Paytm wallet. Okay, so this Paytm wallet, now you have 2000 rupees in your Paytm wallet. That is not a currency, that is your asset. Now what is the difference between asset and currency? Right, currency can be my asset, but all my assets are not currency. Right, Paytm can refuse to honor its obligation of award giving me rupees 2000 just because of the fact that I have submitted 2000 rupees in my wallet. Understand? Paytm is not obligated. Paytm is not a Reserve Bank of India. It is not promising you to provide a sum of rupees 2000 if you submit that 2000 rupees in Paytm wallet. Okay. Yes, you can certainly. You cannot take your Paytm wallet to Paytm company and say that give me 2000 rupees in exchange for my 2000 rupees that are lying in my Paytm wallet. No, you cannot say that. Because that role is specifically entitled to one bank, that is RBI. That is Reserve Bank of India. Now why? Now if Paytm wallet cannot do this, so why are we putting our money into that? We are putting our money, the Paytm wallet is nothing more than a accounting transaction. Basically, it is nothing more than a balance sheet you have. Balance sheet in the sense कि you put 2000 rupees, you debit it, then credit more rupees. So they are just maintaining a balance sheet for you in the lieu of the money that you put there. Understood? So this Paytm wallet and all these wallets, they are not currencies. Very first thing. Because currency is backed by central government. They are assets. You have rupees, an asset of rupees 2000 if you have 2000 in your Paytm wallet. Understood? Now what use can you bring that Paytm wallet into? For making purchases, right? For making purchases. Now what happens is, whenever you make a transaction through a Paytm wallet or any other wallet, you can directly see कि yes, I have made a transaction and this transaction has happened. So what happens is, Paytm wallet is linked to some bank account, right? Paytm wallet is linked to some bank account. The Paytm transaction is not for Paytm. The transaction is between the bank of the merchant and your bank. Okay? That is only reflected on your Paytm and the person's Paytm who is receiving the money. That means the transaction takes place between the banks through UPI, okay, or any other method, whichever you want, debit card, credit, whatever method you choose. But the transaction that you are shown on your screen, mobile screen, is not taking between Paytm A and Paytm B. It is an accounting method कि if you want to pass rupees 10 to some person who you will be having their Paytm number, and then Paytm will update that 10 rupees as a credit or debit in that account and credit or debit in your account. That means Paytm wallets and all these wallets are not currencies. They are rather what? They are accounting tools. Okay. Now what is the, if we do not talk about digital currency, if we talk about the characteristics of a currency, the characteristic of a currency is always issued by a central bank and hence is a fiat money. It will now, digital currency will not replace the original currency, not for the time being at least. Maybe 50, 70 years down the line, the original currency may be replaced, but it will be not replaced right now. It will run parallel to the original currency. However, the aim will be to minimize the original currency that is in circulation. Then it will not replace the demand deposits in the banks. Now demand deposit means any deposit in the bank which can be taken out on demand, right? They say, okay. So time deposits are fixed deposit and all these things. What is demand deposits? Demand deposits means, see, there's a very crucial difference between non-banking financial corporations and banks, and that difference is that banks can have demand deposits. NBFC cannot have a demand deposit. NBFC cannot have a demand deposit. NBFCs, non-banking financial corporations, can have a time deposit. They can fix your money for 5 years or 10 years, but they cannot open an account which has a demand deposit. Okay, they cannot accept demand deposits. Only banks are entitled to accept demand deposits. Okay, right. There's a reason behind that, because demand deposits are settled in real time by RBI payments and the payments clearing system of RBI. Okay. NBFCs are not a part of payments and clearing system of RBI. Only banks are the part of clearance or payment and clearance system of RBI, where the clearances of balances between the banks takes place in real time, and NBFCs are not a part of that. Understood? However, now digital currency will be very similar to your Paytm wallet. Like there can be a wallet by RBI, okay, where your money will be directly transacted in your account. Okay? Like your salary will be directly credited to your account. For example, 50,000 rupees credited to your RBI account. Now here you can see that the account is by RBI directly. It is not of some bank, SBI or all these banks. Why? Because these banks hold your money for yourself. Okay. Now if RBI, see, the currency generation is not the task of SBI or any other bank. It is the task of RBI. Understood? So if you have some money, okay, so who is directly accountable to that money? RBI, right? Not SBI. So you can have a wallet, that is wallet of RBI, and RBI will be directly crediting money into your account. Something like that. Now, what are the characteristics of central bank digital currency? First of all, if we shade this portion, this represents, it's a Venn diagram, and this section represents central bank digital currency. First of all, it should be a central bank issued. Okay. Second of all, it should be universally accessible. Okay. Third of all, it should be electronic. Fourth of all, it cannot be peer-to-peer. Peer-to-peer means any transaction that takes place between me and you directly. Okay. It is not peer-to-peer in the sense, see, central bank issued cryptocurrency can be peer-to-peer. Okay. Why? If central bank starts issue cryptocurrency, the cryptocurrency will not be regulated. Okay. It will not be regulated. The value of the cryptocurrency will not be regulated. However, the cryptocurrency can be issued by one entity that will become central bank issued cryptocurrency, the value of which can alter, which can change. It will not be a fiat currency. Okay. But that is different. Now peer-to-peer means where people can directly verify each other's transactions. Here it is not peer-to-peer in the sense that only central bank can issue it, only central bank can verify the transactions. That is why it is not peer-to-peer. Now these are the characteristics of, it should be universally accessible, it should be electronic in form, it should be central bank issued, it will not be peer-to-peer. Understood? And इसी पे question आ जाएगा बहुत simple सा, what are the characteristics of a digital currency or what are the characteristics of central bank issued cryptocurrency. Okay. So that is how you will have to develop your understanding of these topics. Now, as I said, we will be looking into the very minute details or a very strong observation or a very small observation about the difference between digital and virtual currencies. Okay. So let's see the virtual currencies first. It is a type of unregulated digital money. According to the European Central Bank, this definition was issued by European Central Bank. It is a type of unregulated digital money. Now virtual currency, cryptocurrency is a virtual currency. It is not digital currency. Okay. It is a virtual currency. Now why virtual? Virtual means which is something not real. It does not has a real backing. Whereas digital means an object which is actually real and its digital form exists. Okay. There was one question regarding the very same definition this year itself of NFTs. NFTs are digital representation of physical objects. That is correct. NFTs are a digital representation of physical objects. That is correct. But NFTs, non-fungible tokens, can also be a virtual thing itself, like completely virtual thing. Like the Twitter post. If someone makes a Twitter post, that is completely virtual, that does not exist in real life, it is intangible, but it does exist in virtual world. That is why it is called virtual NFT. Whereas digital is, for example, if there's an art, okay, and someone makes it, transforms it into an NFT, so it will not be virtual NFT, it will be digital NFT. This is a very minute difference, but see, UPSC asked a question this year itself about these things. So that is why it is very important that you focus on these small terminologies. ठीक है, UPSC is not going to ask very huge things, no, they will be asking the smaller understandings. Basics are always tough. ठीक है, तो it is type of unregulated digital money which is issued and usually controlled by its developers like cryptocurrency and used and accepted among the members of a specific virtual community, है ना. तो that means it might not be universally accessible or acceptable. It can't be necessarily converted into cash since it is not a fiat money. Simple. It majorly represents an accounting entry than a currency of exchange. It merely represents like Paytm wallet. You cannot use Paytm wallet as currency of exchange. If you offer me Paytm, like if you offer me something in exchange, like if you offer 4,000 Paytm rupees, I might deny and you cannot challenge me. But if I'm offering you fiat money 4,000 rupees, you cannot deny it. Okay. It is not issued by a central bank. Fact. Now coming back to the digital currency. It is issued and regulated by a central bank or a central authority, and it can be used as an alternative to cash anywhere because of the fact that it has been issued by a central bank. It can be converted into cash on demand because it is almost same to a cash, because it has the same characteristics of cash. That is, it is directly issued by RBI. It is the value of the currency decided by RBI, and hence no one can deny accepting it. It not only represents an accounting entry, it certainly does. There is an accounting entry, that means debit or credit, but it is not merely that. It is also backed by hard money. Okay. It is issued by central bank and has sovereign backing. Now there have been a lot of fintech innovations in recent years. Since 2014, there have been a lot of fintech innovations. Fintech means financial technology. And let's look at them one by one. RBI guidelines for payment banks, in 2014. Payment banks cannot accept deposits more than 1 lakh. So payment banks are the banks which are not conventional banks, but the banks which have been, like, see, we were on a very strong digital ride. Right, as a country, we were having a lot of, because of the penetration of smartphone. See, every person is not having access to the bank, but most of the people are not now having smartphones. So banks thought that if smartphones are penetrating faster than banks, so why not bring banks through smartphone, right? So they started payment banks. Okay, uske baad account aggregator in 2016. I have talked in one of my lecture about account aggregators. Kindly go through that. Okay. Now prepaid instruments in 2017. Prepaid instruments like Paytm wallet is a prepaid instrument where you deposit some money and then that money is being used. Peer-to-peer lending in 2017. Peer-to-peer lending has also been started. Like crypto is a peer-to-peer lending. Okay. Invoice discounting. Central bank digital currency now in the budget. What is the significance of digital currency? Safer form of transaction, because you can always trace it. Okay, it will be a safer form. It will be always in your. You don't have to worry about some thief stealing your money, because it will be in form of digital money inside your phone. Okay. The reduction of cost in printing and circulating money, of course. Traceability. All the transactions can be traced by RBI. Can be a threat to privacy because all the transactions can be traced. So it can also become a threat to privacy, right? And threat moreover because the government or RBI is tracing your money. Ease of access wouldn't require a bank account. Okay? So there will be huge reduction in the banking staff because now directly you will be having an app, you will be directly receiving money from RBI. You don't have to go to bank to open an account. Okay. Reduction in cost of transaction, understood. Cash is having a high cost of transaction, and overcoming international transaction hurdles. For example, someone is in USA and their relatives are in India. So there is a 12-hour gap between both of these countries. So when it is day here, it is night there. So if someone wants to make a transaction, so it's important that the Forex reserve there is also open, or Western Union branch there is also open to go for that transaction to happen. Right. But in this case, the governments can formulate laws, and a real-time transaction anytime 24/7 can happen between the digital, of course using the digital method. So that is all for this digital central bank digital currency. It is going to be a very revolutionary thing like UPI was. Let's see how it spans out to become.